Let's get in a global check then. U.S. markets, remember, had a solid finish yesterday. The Dow gained fractionally, but the S&P 500 climbed nearly 1% and the Nasdaq surged 1.5%. Over the last 2 days, the inflation print has been soft, the labor data has been strong, and the U.S. earnings, at least up until now, from the likes of PepsiCo and Delta Air have been very, very resilient and higher than what the street was anticipating. It's a good cocktail of macroeconomic indicators. Mixu Das, Asia equity strategist at JP Morgan, is with us on the show now. Mixu, everything's looking good, but so is the level on the indices now. The S&P 500, for instance, crossed that 4,500 mark yesterday and closed above it for the first time in 15 months. How would you view the setup on the U.S. markets, the equities, and where do you think it's headed?
Right. I think if you look at the U.S. market, right, there's two separate trades going on at this point. One is that this ongoing AI bubble where, the running joke is AI actually stands for all in. And then you have the other trade in the US market, which is around the macro. And here the inflation print remains the most important. The good thing, or the good news has been so far that inflation on a year-on-year basis, headline inflation, has been falling all through this year since, really late last year. And that's been a key driver of upside in US equities. But the problem there is that the next print that comes out in August for the July CPI is probably going to start rising again. And that becomes a little bit more challenging environment for the Fed to start responding to. And I think that the next move for the market is going to start to price in further rate hikes from the Fed. And that is going to drive a more cautious tone in the rest of the US equity market starting from sometime in August. But in the very near term, I think that the momentum in this market is still very strong. Sentiment has become quite buoyant across our positioning metrics. It's starting to look a little stretched, but I think in the very near term, the momentum continues.
Okay, so the momentum is strong in the near term and sentiment is buoyant. Mixu, good morning and always great having you on the channel. So you're saying that the CPI print in the US from here on could perhaps start to spike a little bit, and that could put pressure on the Fed, perhaps going in for more rate hikes. So we're not done with rate hikes just yet. There's one more in this policy, and how many more are you expecting? And if they come through, then how should an equity investor in India respond to that? Because it's been great going for an Indian investor up until now.
Yeah, that's a very good question because, when we think about further Fed hikes, so we do have one more hike priced in for July in our official forecast. But the bias of our forecast is that there could be more. And if inflation proves to be more sticky, so if the headline year-on-year number starts to rise from July as we expect, and if the core inflation remains sticky around the 4.5, between 4.5 to 5%, then you'll probably need to see more hikes from the Fed. Fed is already starting to guide towards that. So several FOMC members who have spoken in recent days are talking about needing further hikes to bring inflation down. And if we start to move in that direction, that's where it becomes a bit more challenging for the US equity market. Now, coming to India, I would say that there are three big portions to the India trade right now, right? There's one in the very near term, maybe there's some toppy behavior in terms of cyclical tops. So earnings are a little bit toppy, but the valuations look quite toppy at 1.6, 1.7 standard deviations above average. That's kind of offset by what's happening from the structural perspective. And we've seen this in terms of foreign buying into the Indian market, right? All the structural positives are at this point well known. You got urbanization, you got digitalization, you got supply chain relocation, a growing bounty of savings within the domestic economy. And all of these things are long-term positive for the market. And foreign investors who have been, seeing little in terms of exciting opportunities elsewhere have been piling into the market. If you look at Asia ex Japan as a whole, foreign buying since April has been about $17 billion. And if you just look at India, foreign buying in that period has been $17 billion. So all of the foreign buying in the region has basically been going on in India, and the long-term opportunities there are being appreciated. The problem becomes, like I said, if the US market starts to move lower, I think that would drag India down as well. But this is sometime in August.
Hi, Mixu. Good morning. Mixu, I wanted to ask you about a couple of other two key variables from an Indian equity perspective. One is the dollar index. That's cooled off, which is good for emerging markets and obviously India as well. Where do you see that one headed? Because it's collapsed and that's pretty good news. And also Brent crude prices being a little bit stubborn. It's moved to around $81 per barrel. These are very important points, both these two, from an India market perspective. How do you see that panning out?
Yeah, unfortunately, both of these are probably a little bit of bad news for India market going forward because JP Morgan's house view on the dollar is that the dollar strengthens in the second half of this year. That obviously hasn't happened so far because the inflation print has been softening. But like I said, if inflation starts to rise again and the Fed moves towards more hikes rather than less, I think the dollar index will start to move higher also. That having said, specifically for India, this is probably a little bit less of a concern than it would usually have been, because what we're seeing this time around is that the dollar moves are happening more against lower yielding currencies rather than higher risk or traditionally seen as higher risk currencies. So a lot of the currencies that were very sharply depreciating in 2013, the taper tantrum or several other risk episodes that we've seen over the last several years, they are very resilient. On the other hand, currencies that are lower yielding, like in China, in Taiwan, in Japan, these are the currencies that are depreciating the most against the dollar. And our expectation is that if the dollar strength that we will see in the rest of this year is probably going to continue that sort of momentum. So INR as such, it probably is going to be weaker, but not that much weaker against the dollar. On crude oil, yeah, again, our expectation here is that oil prices are biased upwards. The market supply demand is moving into tightness over 3Q and will remain tight into 4Q. Our expectation for U.S. economy to go into recession is really a 2024 story. So over the rest of this year, you'll probably see more upside in oil prices.
All right. I just had one final follow-on question. What stayed with me in this entire discussion, Mixo, is you saying that out of the $17 billion that came in from April into emerging markets, a large chunk of that, actually most of that came into India. Do you see that disproportionate amount of money continue to come into India for the rest of the year as well? And would it be your preferred pick?
So the thing is, on a structural basis, investors definitely prefer India, and that continues to be the play. But a lot of the inflows that has been coming into India has been because China hasn't worked. And as long as China continues to not work, that will probably remain the case. But our expectation is also that once you get into later this year, sometime in 4Q, the China market, for various reasons, will start to work. And we'll start to see that market pick up steam from there going into 2024. And at that point, I would expect that the foreign inflows into India will start to slow down and, investors will diversify into China as well.
Mixo, we'll leave the conversation here. Thank you very much for joining in. Need to get into a break. We'll come back and get you our list of top stocks to watch today. Stay tuned.